Welcome to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, here's this week's market wrap with commentary and analysis from the low-cost precious metals dealer voted best in the U.S., Money Metals Exchange.
Welcome to this week's Market Wrap podcast. I'm Mike Gleason. Coming up, David Morgan of the Morgan Report joins me for a wonderful discussion on the metals and the markets. He'll share his insights on what the smart money is already doing, the dangers of complacency, and the importance of limited counterparty risk. Backed by popular demand, don't miss our recent interview with the silver guru, David Morgan, coming up after this week's market update. Well, gold and silver markets are advancing for a second straight week as the U.S. dollar continues to slide. The dollar index dropped to a fresh new low for the year on Thursday following the European Central Bank's policy meeting. The ECB left its quantitative easing program in place and kept its benchmark interest rate at zero. Despite Europe's dovish monetary policies, the euro has been steadily gaining ground against the greenback this year. Perhaps currency traders see the U.S. Federal Reserve's tightening campaign coming up short of expectations, while at the same time, the Trump administration seems to prefer a weaker dollar. The opportunity for precious metals investors is that gold and silver ought to be seen as fundamentally more attractive alternatives to the dollar than European currencies that yield nothing. It's hard to believe that anyone trading the euro on the long side actually believes that euros will be a superior long-term store of value. Of course, currency speculators don't care whether the euro goes completely kaput in 10 years. All they care about is whether it's a viable day trade. The same could be said for stock market speculators. Yes, the Dow notched another new all-time high this week, but at this point, U.S. equity valuations are so lofty that even blue-chip stocks may only be suitable for short-term speculators who have stop-loss orders in place. The real long-term value these days is to be found in hard assets, including precious metals. Gold and silver still sell at bargain prices despite rallying over the past few days. Gold is up 1.8% this week to bring spot prices to $1,252 an ounce as of this Friday recording. Its less glitzy counterpart silver now trades at $16.52 per ounce and registers a weekly gain of 3%. Both metals are now trading back above the respective support levels that got broken to the downside earlier this month. The technical damage has been mostly repaired. Of course, we still need to see if it stays repaired in the trading days ahead. You can never take anything for granted in the day-to-day gyrations of these markets. What you can be confident of as a bullion buyer is that you're obtaining real wealth that will hold value forever. And there's a good chance precious metals will gain value in the years ahead. As long as the national debt keeps exploding and the currency supply that services it keeps rising, the prospects are good for gold and silver prices to ultimately rise to new highs. $19.9 trillion and counting, and we're soon to blow past the current $20 trillion debt ceiling. The correlation between the national debt and metals prices is a positive one, even though it's not always evident in any given year. Analyst Gary Christensen posted an article to MoneyMetals.com this week showing the recent history of silver's ratio to the national debt. Over the past 30 years, the price of an ounce of silver has ranged from 0.7 to 2.9 times the national debt expressed in trillions of dollars. Silver currently sits on the low end of that average. History suggests that silver will eventually revert back up toward the mean and possibly higher. And political reality suggests that the national debt will continue soaring. Although there are a few conservatives in Congress who are insisting on spending cuts and a balanced budget, they can only hope to win small concessions from leadership. There will be no actual reductions in what the federal government spends. No, the national debt will continue growing by hundreds of billions of dollars a year. Senate Majority Leader Mitch McConnell wants to raise the debt ceiling before the August recess. It might get delayed by protests from fiscal conservatives, but rest assured, the debt ceiling will ultimately get raised, just like it always does. You may not be able to count on establishment Republicans to keep their word on replacing Obamacare or cutting taxes, but when it comes to saddling us with more debt, you can absolutely 100% count on them to come through each and every time. That is the one thing that the majority of both parties agree on wholeheartedly. Perhaps when the national debt officially crosses the $20 trillion mark, it will signal investors to reassess the risks of holding too much of their wealth in dollars and dollar-denominated IOUs. And now, back by popular demand, here's our recent interview with longtime friend of Money Metals Exchange and precious metals investors in general. It is my privilege now to welcome in our good friend David Morgan of the Morgan Report. David, it's always a real pleasure to have you on with us, and I'm especially excited to talk with you about some of the topics we've got on tap today. How are you?
I'm doing well, Mike. Thank you very much.
Well, as we begin here, David, I want to talk to you about the danger of complacency, because I think it's a very appropriate topic for the times we're in right now. To you and me and many others in our space with a similar worldview, we see a whole slew of reasons to own precious metals. We have threats of war in many places throughout the globe. We have a president here in the U.S. who the establishment hates and is hoping to oust if they get the chance. We have nation central banks printing new fiat currency at unprecedented levels all throughout the world, an entire continent over there in Europe that appears to be potentially at risk of seeing their political and currency union falling apart, terror threats all over the place, a refugee crisis, the list goes on and on. But all the while, we have the stock market continuing to make all-time highs, with most people seeming to believe that everything is hunky-dory while completely ignoring all of those geopolitical and monetary headwinds. Or for those who seem to grasp all that's going on, maybe starting to believe that it doesn't matter because, after all, the feds and the central planners are going to be able to manage this thing forever. So talk about complacency here, David. Why aren't we seeing more flock to safe havens, at least not here in the Western world, and discuss the dangers that exist if we let ourselves fall into the complacency or the nothing is ever going to change type of mindset?
Well, that's a tough one. I would say first is eternal vigilance. I mean, freedom depends on it. So my idea or ideal from the beginning has been that all fiat currencies eventually fail. And I also believe that it would happen within my lifetime, and I'm certainly older than I was when I held that belief, yet I still hold it. So really there's a mandate to hold some portion of your wealth in a savings. In other words, you know, the way capitalism is supposed to work, you build from a savings base. That savings is put into capital formation, which means you construct something, be it software, hardware, a building, automobile, whatever, and that becomes a benefit to society at large, and they vote in the marketplace with their dollars to further the project, so to speak, make a profit, which returns to the initial investors, and on it goes. So that's the ideal. My statement was that in times like these, rather than be a true capitalist, which is what I just outlined, it requires further savings because there's too many uncertainties out there with one certainty. Every fiat currency on planet Earth in all of recorded history has always failed. So to say that the dollar won't, is a misstatement, at least based on past history. Is it going to, for this time, be different? Yeah, I guess it's possible. But if we look at it objectively and we state, well, let's really see what's going on with the U.S. dollar. If you look at the Federal Reserve Board's own website, they will freely admit that the 1913 dollar is worth about 3 cents today. So you have a 97% loss when their mandate was to basically keep the currency stable. They have failed miserably. And most people that follow what you do, what I do, what the hard money camp, the gold silver guys talk about, they understand this. But they're very, very tired out. They're worn out. I mean, I coined a phrase a long time ago that the silver market will either scare you out or wear you out. We're definitely at the wear you out phase. And this is where complacency sets in, where, well, they've manipulated the market. We even have proof. Deutsche Bank admits it. There's a new CFTC ruling that's gone on that they've singled out an individual that's going to turn over evidence and probably bring others into the mix on spoofing the market and the silver market, and yet we don't really see any real significant price change. So the complacency is, look, I know what's going on, but it doesn't matter because these guys have got control and they're always going to have control. You know, it brings to mind the adage, the darkest before the dawn, the big struggle for a seed to germinate, that last little oomph that's required. And I think we're very close to the tipping point. And I'll add on to that. First of all, I want to back up a second, Mike. As you know, and you're on my service, I put out an alert early in the morning about the second week of May, and I said, I think this is it, meaning the fundamental significant shift between paper assets and hard assets. I think, we don't know yet, that gold and silver had turned to the upside and stocks to the downside. Now, since I made that statement, stocks have made a new high, so let me get that on the record. However, it looks to me as if we're getting a confirmation on that with gold right now, because gold is right at the breakout point from a 6-year downtrend. And it's mostly safe haven buying, but it's not the people that we just referred to, or I just referred to. It's basically the smart money, which means big investors, large hedge funds, and China primarily. China's gold demand is set to surge about 50% to about 1,000 metric tons this year. Their demands for gold bars are on track to make a 50% move in 2017. The geopolitical risk internationally is probably at an all-time high, and this is leading to safe haven demand, again, for smart money, nation states, people in the know, people that have basically sold off their stocks quite some time ago near the highs that have capital sitting on the sidelines, and that is starting to filter into the gold market. And then you've got, of course, a lot to do with the UK election, terrorism, the rising tensions in the Middle East, and all this is supportive of gold, especially after the attacks in London that took place recently. And the other fact is that gold is 12% higher for the year, and it's actually outperforming stocks. Yet if you stop the average investor on the street and ask them, what's doing better this year, I'd say about 90% would probably say, probably higher than that, probably 98% would say, well, stocks are doing better than gold.
Yeah, it's a very valid point. As a follow-up here, and this is kind of an open-ended and very broad topic, but comment on counterparty risk, because I know that's something you've been covering in the Morgan Report recently. Take it wherever you want, but share your thoughts there, because part of this complacency is failing to recognize the tremendous amount of counterparty risk that exists in the world today. Give us your thoughts there, David.
Yeah, I could go on. I'll try to be succinct. First of all, the belief system is so strong, and yet the truth is sometimes actually opposite of a very, very strongly held belief. The belief globally for all of the establishment economic system, which means all nation states, big hedge funds, all banks, etc., believe that the safest place that you can be is in a United States bond market, be it a Treasury bill, a T-note, a long bond, anything in between. If you own the full faith and credit of the United States debt, you are buying something extremely safe. And the truth is, it's the exact opposite. It is probably the one place that at some point in time everybody's going to want to get out of at perhaps the same time or close to it. How can I say that? Well, going back to what I stated, all fiat currencies eventually fail. So this is proven time and time again, yet the belief system has yet to shift in a dramatic way. However, the cryptocurrencies are a bit of a tip-off that somebody understands what's going on. And I admit, the best place that you could have possibly been over the last 30 years for a long-term buy, hold, and forget it trade would have been the U.S. bond market. This is true. But nothing grows to the moon. I mean, all trees grow as high as they grow, and then they stop. It's the same thing with the bond market. So there is a huge debt bomb that we talked about in the Silver Manifesto that's waiting to go off. And when that happens, and it doesn't necessarily mean one day, boom, it goes and everybody understands it. It's more likely to take place slowly than all of a sudden, which means that a lot of savvy people will be exiting the dollar, which we've seen for years now. We've seen a lot of nation states that have basically abandoned the dollar slowly, sometimes fairly quickly. China, Russia, settling their payments between each other in their own currencies. Lots of moves from, the AIIB, the Asian Infrastructure Investment Bank. I mean, there's a lot of periphery situations that savvy people are aware of that have been a way for not only individuals to the cryptocurrency situation, but nation states to exit exposure or much exposure or to mitigate their exposure to the U.S. dollar. And this is a harbinger for what will take place at some time in the future. So these things always end. The longer you, as to coin and give credit to Jim Sinclair, pretend and extend, you pretend that everything's okay and that these guys pretend they can manipulate it forever and extend the problem, the worse it becomes. And this is the state that we're in right now.
A follow-up there on cryptocurrencies, David, who we've seen a real boom in those lately. Now, I think we would probably both see value in owning some Bitcoin or one of the alternatives. But one thing that we should say is that digital currencies are not and should not be viewed as a substitute for owning gold and silver, which have stood the test of time as money and have been money all throughout history. Comment on that, if you would.
Well, there's two theories of money. One is that money's whatever the government says it is, which is a legal fiction, and of course you could be the argument that, it's salt or it's cow hides or it's sheep or it's whatever. Well, certainly that's been tried throughout history, but the argument is either it's a legal fiction or it's specie. It's something of value that has value in and of itself, and I would argue silver actually has more value than gold because you can use silver for medicinal purposes, you can use it for electronics, you could use it as money or barter, and it fulfills actually more services to whoever owns it than gold does. But regardless of my thoughts on the two metals, gold and silver, from time immemorial, all of recorded history, have been chosen by the free market as money of substance. And this is where you can't get around the argument. I mean, a lot of people have been brainwashed into believing that gold and silver have no purpose today, they really aren't money, and on it goes. So the idea that you can create something out of nothing and it has value has been tested time and time again, and again, they always fail. On the cryptocurrencies, I'm not against them, first of all. In fact, I just gave a lecture about them. I talked about gold, silver, and the blockchain. Of course, I mentioned Bitcoin primarily because it's the leader. Bitcoin's unusual. I mean, let me, again, back up slightly, Mike. First of all, to be intellectually honest, would a pure fiat system work in theory? And the answer is probably yes, to be intellectually honest, if and only if you had a limited supply of dollars and they only grew as the economy grew. You would have, in theory, a pretty good paper system. However, that's never been the case. Even when the gold standard bashers bash gold, they've been, well, the gold standard's never worked. Well, yes and no. The gold standard would work because what gold's purpose is to keep that money supply growing basically at 2% a year, which is probably what a lot of the people on the left side would like, which is sustainable growth. And in a real, true economic system that's backed by physical reality rather than a make-believe set of derivatives that is unimaginable at this point in time, you have an economic system where each dollar over time becomes more and more valuable. But that is not where we're at. So we're in a situation where there's a challenge to the system, and the main challenge really isn't coming from the precious metals. The main challenge is coming from the cryptocurrencies. Bitcoin is obviously the leader. I look at it, Mike, right now with 750 different cryptocurrencies out there being similar to what happened in the tech wreck, where a lot of these domain names were getting huge valuations for a very short time and a lot of people were piling in. And yet today we still have Yahoo.com, Amazon's a big leader. There's certainly companies out there that were the real deal, stood the test of time, and a lot of these dogs and cats went away very rapidly. I think the same thing will take place in the cryptocurrencies. I do think that some of them are here to stay. I think Ethereum is really not a coin. I think it's a platform. I think that few people really understand its potential. I think it's one that's, I'm favorable to. Bitcoin, it's hard to argue against. I mean, the market's certainly voting very strongly for that one. Dash is an interesting one. I certainly don't know them all. I don't claim to be an expert. The one place I really do have some concerns is security. And I gave that main concern at this lecture I did in Vancouver recently. And, of course, I got some blowback on it, and people were telling me, you know, you could take your account and write it down on a piece of paper and hide it under your desk and that type of thing. I get that. I understand that. But there's already been security issues with Bitcoin, and a lot of people won't do that. I mean, just because you have the potential to make it more secure doesn't necessarily mean that most people will. So there is some vulnerabilities out there, and this is not me speaking. These are some ones at a recent tech conference, and these are high-level people that were talking about the Internet of Things and how vulnerable all this Internet of Things model is with this what's called big data that's taking place before us right now has security issues, and they do. So that's something to bear in mind. Now, as far as how much to put into a Bitcoin or whatever, certainly on free market, you decide for yourself. But, I think Bitcoin's got a long ways to go, and I say that based on technical work. I mean, I looked at the chart before I did my presentation because I work pretty hard at these, presentations, as you know, and the volume was tremendously large in Bitcoin over the last couple of months, which means it's got a lot higher to go. There's no question about it. And momentum feeds on momentum, especially when you're making new highs. There's nothing more bullish to a market than a new high because everyone that owns it wants to hold it because they don't know how high is high. So there's very little that sells back. Well, there'll be some profit taking, but not much because everyone's concerned with, wow, I made, this much percentage today. I wonder how much I'll make tomorrow. So there's not much selling pressure, and it'll continue to go up. So very interesting market from a couple places. And the main one I would emphasize, which is probably a different viewpoint than many, is it's a competing currency to the present system, and obviously it's taking off rapidly.
You've always focused primarily on the silver market throughout your career, and I know part of why you're such a big believer in the white metal over the long run and feel that it could really outperform gold and all other hard assets for that matter is the fact that the moves can be so explosive because it's such a small market, something like 1/10 the size of the gold market, I believe. So talk about that dynamic and then remind folks about the need to recognize that the moves can be pretty substantial in the silver market, not just to the downside, but also to the upside.
Well, exactly. What I just outlined earlier was China buying more gold this year than last. And the smart money can move into gold. I mean, gold is a small market relative to the total financial markets, but they can protect themselves with gold. It's impossible for really big money to move into the silver market. It's just too small a market. And what will happen is once gold breaks free, whatever that means, actually we're at the cusp of breaking through a 6-year downtrend. And it's not going to be the next day, David. It's going to be in a time frame, probably in 2018, when we're going to really see some momentum to both of these markets. But if you look at the total asset base of the world, physical gold makes up about 1%, but silver makes up 0.02%. And there's a lot of people that at some point will want to turn some of their Bitcoin profits into hard metal. I'm not saying everyone, I'm saying some percentage. But there'll be a move into the metals. And once the move into the metals starts in earnest, like we saw in 2011, you will see a lot of money, quote unquote money, moving into the precious metals because it will be apparent at some point in time that what I started this interview with, that the dollar's demise is upon us and no one's going to trust it. It's a confidence issue. It's a trust issue. And what's trusted more than anything else, even more than Bitcoin, at least history shows, is the precious metals. So there'll be people that will be exchanging some of their Bitcoin profits for metal. There'll be people on other currencies doing the same. There'll be people that have huge bond holdings that will want to get out and move into the metal. And once gold starts moving to a level that a lot of people question if they can afford it or not, that will spill over in the silver market. But the silver market's so tiny that it will take it much higher because people really won't care too much about the price. They'll care about protection at that point. And that means that, well, I can afford silver. It's only, let's pick up a number, $50, and gold is at 5,000. It's 100-to-1 ratio. I can buy silver. I can afford it. I'm going to buy it. So we will see. This is what happened in the 1980s model, and this was with basically some Arabs and the Hunts taking, a large position in silver early before it made its big move. It was actually retail buying that took it to the heights. It wasn't Hunt. He was already positioned. It will be similar, I think, this time, except it's a global-based market and we have the Internet, which means that people that have never bought a silver or gold coin in their lives can almost instantly Google how to buy silver, look it up, and see how to do it, and do it within a matter of a few minutes on the Internet. So this is going to put huge pressure on the markets that they've never experienced in the past.
As an aside, we have been seeing a big uptick in the Bitcoin orders that we have been taking on our website, moneymetals.com. We've accepted Bitcoin for a good, 2 years now, and it's really starting to actually move the needle, believe it or not. Well, David, as we begin to close here, the metals markets, of course, are a major focus for you, but we've also come to value your insights when it comes to broader issues such as honest money and personal freedom. Now, the Liberty Movement got an enormous boost in 2008. The financial crisis and Ron Paul's rise to prominence were among the major catalysts. A whole lot of people were confronted with the problems in our government and our monetary system. However, nearly 10 years have gone by since the financial crisis, and precious little has been fixed. But people have gotten tired or complacent, like we talked about at the top of the interview. Take an issue like audit the Fed, for instance. College kids chanted that slogan at rallies a few years back, but the establishment fended off the effort, and the momentum appears to have faded there. Now, a good argument can be made about that effort being a waste of energy because beating Congress and Wall Street in their own rigged game is never going to happen. But what are your thoughts on the state of the Liberty Movement today? What efforts do you see working, and where are the challenges?
No, well, that's a real tough one. First of all, I'll start from the bottom up. Number one is, take care of your personal self and your family. I mean, you want to be, healthy, wealthy, and wise, to coin Ben Franklin. So really change what you can. I mean, make sure that you're eating right, make sure that you're exercising, make sure that your health is number one. I mean, when I sign off the Morgan Report from day one, I always sign it off wishing you health above wealth. There's a reason for that. Wisdom beyond knowledge. Having the knowledge of something doesn't mean much unless you implement it. Being wise is meaning you know how the world works and working with it, and that's working with the truth. So that's the bottom line. I think control what you can. Moving up from there, what can you do? Well, I'm more or less a pacifist, so I think, for example, what Ted Butler did over all these years, and doing a shout-out to Ted, I mean, he was instrumental and spearheaded this whole idea of what was going on in the CFTC, and it's been pretty thankless for him for a long time. Yet he has maintained his position and asked people to help him write to the CFTC and investigate the manipulation of the silver market, and for years nothing really happened. But this little guy that's being held up as someone spoofing the market and then building a case against him is probably due to some of the efforts that Ted did, in fact, most recently. So you can make your voice heard. You certainly don't want to give up. Congress does respond to the populace. It really, really does. So a phone call is much better than an email, and a written correspondence carries a lot more weight than an email. And it doesn't have to be a lengthy manifesto. It can just be simply, I support freedom, and you aren't. Or something even better from my politically perhaps questionable point of view, but it's spot on legally. It's you took an oath to defend the Constitution for all enemies, foreign and domestic. And I'm starting to question whether or not you were upholding that oath. Write me back. Something along those lines will wake them up. Whether or not you get a response, I doubt it. There's probably a computer form letter that has anything with the word Constitution in it. It's probably pop out a form letter and send it back to you. But regardless of that, she certainly can make it. And I'm for peaceful protest. The problem we have now is this quote-unquote anarchy with what's going on from a certain political belief system where burning things up and bashing windows, that doesn't solve anything. And it's deconstructive, not constructive. Yet there seems to be an element that actually relishes making that kind of a statement, which is very sad indeed, and it falls back on us as a society on what's really being taught to the population at large, and what are the moral values, and what does make us great. What makes us great is we had high integrity. We were telling the truth. That's what made America great. It wasn't the financial system. It was the financial system was honest. That helps a great deal. But as I've said many times, it probably bears repeating one more time, Mike, as I close out, is there's a direct correlation between the integrity of the money system and the moral integrity of the population at large. The more the monetary system deteriorates, the more the moral society deteriorates of the population. They go hand in hand, and we're witnessing that as we speak.
Well, very well put. We'll leave it there. Well, as we wrap up here, David, talk about some of the things you're working on there at the Morgan Report. Maybe mention the recent book and let people know how they can get their hands on that if they haven't already, and anything else you want to leave our listeners with today.
Yeah, just go to the main website, themorganreport.com. I just wrote weeks ago the silver forecast for 2017. If you're already on the email list, you can go ahead and download that for free. The system is smart enough to know if you already have your email. And then if you're interested in the book, just pull down the books tab on the website. You can order either book, The Silver Manifesto or Second Chance. And, Mike, I appreciate you mentioning that for me.
Well, outstanding insights as usual, David. It's wonderful stuff to hear, and we're very grateful for your time and for giving us your thoughts on these important matters. We appreciate talking with you today, and we wish you an enjoyable summer and look forward to catching up with you again before long. Take care, my friend.
Thank you very much.
Well, that will do it for this week. Thanks again to David Morgan, publisher of The Morgan Report. To follow David, just visit themorganreport.com. We urge everyone at the very least to go ahead and sign up for the free email list and start getting some of his great commentary on a regular basis. And if you haven't already, be sure to check out either the Silver Manifesto and or his new book, co-written with our mutual friend David Smith, titled Second Chance, How to Make and Keep Big Money During the Coming Gold and Silver Shockwave, both of which are available at moneymetals.com and other places where books are sold. Be sure to check those out. And don't forget to check back here next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Gleason with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.